Well, and of course, this week as well, central banks. What a big week it will be for interest rate decisions. But could we expect some surprises? Well, last Thursday, despite growing concerns of a recession in the Eurozone, the European Central Bank hiked its rates for a 10th consecutive time. Main refinancing rates now stand at 4.5%. Well, opinions were said to be split among ECB board members before Christine Lagarde's announcement, but she made a point of saying at Thursday's press conference that a strong majority supported the decision. On Wednesday, then, it will be the US Federal Reserve's turn to decide on its rates. It's widely expected to keep rates steady. The bigger question is whether the Fed is done with rate hikes. Some of the recent macroeconomic indicators plead for a resurgence in economic activity, therefore raising the risk of renewed price pressures. Now, if this Wednesday's decision is a given, the November meeting could be a close call, and the FOMC economic projections will be of particular interest. Well, as for the Bank of England, well, it's likely to raise interest rates once again on Thursday. All but one of 65 economists polled by Reuters in recent days predict Andrew Bailey will raise rates by 25 basis points to 5.5%. Recent data like industrial production, monthly GDP, both coming out worse than expected last week, could suggest this could be the end of the tightening cycle. But inflation remains much higher than any other major economies, and last week's average hourly earnings let economists think that it could remain so for a time to come. Well, in Asia, the highlight of the week will be the Bank of Japan meeting on Friday. Recently, the BoJ governor fueled speculation of an imminent move. Don't expect a rate hike just yet, though. Key short-term interest rates is seen unchanged at 0.1%. And let's not forget as well that the PBOC is also due to update the market on Wednesday. 1 year and 5 year loan prime rates is expected to remain at 3.45% and 4.2% respectively, as last week the 1 year, the medium-term loan facility rate was kept at 2.5%. Well, meanwhile, what could all this mean for currencies? Well, the British pound has slipped to its lowest level in 3 months ahead of the Bank of England monetary policy decision this Thursday. If the bank surprises markets with anything other than 25 basis points of tightening than expected, sterling volatility might just kick off. If we just bring up the pound US dollar price chart here. Well, if you just have a look at the price chart. So it made a low at 1.2379 on Friday and finished the week near there without testing potential support at the early June low of 1.2369. It's steadied so far today, but might be vulnerable after closing below the 200-day simple moving average. And then if we switch over to the euro pound chart, and it's been trading for 4 months in what appears to be a range trading environment. If the price has a meaningful move away from either side of that range, a breakout trade opportunity may evolve.